are you? TJ and Brock, how are you, buddy? Hope everyone had a decent week. The dollar had a decent week, even with all that, negative news. For the week, we have a 2-week reversal. So last week, in fact, last month, talked about December being one of the weakest months of the year seasonally for the dollar, followed by January, which is one of the strongest. So we're only halfway through January. And I thought that we would challenge a monthly off number. You have a new confinement there. Yeah. These variants are going to complicate everything too. So I was thinking we could rally back to 9180, which is the monthly off number, 92. See, this is the 2-week reversal right here. All it had to do is close over 89.93. So definitely a 2-week reversal. And last week wasn't quite, and now it is. So looking at some of the individual currencies, Euro's really been the weak sister. Pretty ugly week, closing near the low of the week. 2-week reversal here too. It sold this pop up around this level here and covered here. Now I'm looking for, maybe sometime next week. What do you guys think I'm considering? I thought we'd get to about this moving average isn't that far away. It's 2066. So potentially next week, maybe around 60 lower or so, we could get some type of third drive here. Here's drive 1, here's drive 2, and we're getting ready for 3. Most likely next week. But I did talk to my good friend Jim Welsh, and he did say that on the hourly it was 5. He's not strictly an Elliotician, which implies you want to sell the next rally, right? So even if we rally from 20 and a half, his contention is since we had 5 down on the hourly, that you sell a rip in euro. So the sequence of events may be some type of low around 20 and a half, and then maybe we get another rip back up here to this 22 level. S&Ps have finally, talked about this being a descending triangle. It never made new highs. Playing with this level look even when it closed underneath it. So people that were afraid to short risk yesterday because of Biden's speech about stimulus, it's really not such a great week in the S&Ps. There it is. It's a red candle. But actually, we came much closer to a reversal in NASDAQ because of 2-week reversal. And it could still do it today if we sell off. 2-week reversals 12,890. So, we're only 13 points above. And it's hugging this 200-day on the 2-hour. So perhaps next time under last night's lows, we could accelerate. Otherwise, what could happen is we still get new highs that won't confirm into next week, especially if there's going to be a dollar rally. But this was very muted action in the market this week when you look at it. The S&Ps, just grinding along and on the verge of, I guess, this pivot isn't as significant. We took it out and closed above it. This would have been a signal, and then you're back above it. But to me, it looks heavy. Okay, so some heaviness there. Aussie tried to make a new high yesterday, right up here, and rolled over. And the Kiwi HNS is live and well. Thought we might follow through to the upside, but you could call it a descending triangle, head and shoulders top. We'll see. A lot of breakdowns and breakouts are not getting a lot of follow through, classic type of technical formation. So, you know, maybe you need more than one close nowadays to confirm a formation breakout or breakdown. And I hope everyone's had a good week, that we added value to what you're trying to accomplish as a trader. Any questions before I turn it over? Hi, Kevin. Buy what? Good with platinum. Okay. All yours, Blake.
Hey Dale, good morning, TGIF.
Yep, TGIF.
I am, we were just talking about the week, or you were just talking about the week, and you were saying, or you just said, I hope you had a good week. You know, I had such an up and down week. It's been one of those weeks that every day I just closed out profits and just not tried to swing anything, I would have been fine. But what I'm trying to do is position myself for more of a ride on the short side in the market. So therefore, I've got some positions that I've been, just kind of holding, like long some of these euro crosses, long some of the pound crosses. So it's been very up and down week for me. Like yesterday, my positions were down overall, and then today my positions are up overall for now. And all week it's been like that. You look at my P&L all week, it's up, down, up, down, up, down type of thing. So, but I think that's pretty typical when you're looking for some sort of bigger turn in the market. You're going to get a lot of volatility. And you said one thing about the Aussie, or not the Aussie, I'm sorry, about the price
Kiwi.
action. Looks like we could be putting in some false breaks, which I had my eye on the Aussie dollar because we had this false breakout above these highs that looked like a triangle pattern. Looked like we were going to continue this. Can you see it?
Yeah.
Yeah, it looked like we were going to continue to the upside yesterday. And then obviously we've turned and we've reversed, and here we are really at key support. And these are pretty big levels for some of these commodity currencies. The Aussie, I mean, I was just reading, I'll take that back. I was reading a Bloomberg piece last night from their technical analyst out of Asia. Is like, Aussie, here goes the resumption, a trend higher, and very bullish technical piece. And those people are right now going, uh-oh, you know what I mean? So you think about what had happened in North America yesterday, and in Asia, we're starting to see those reversals now. Biden's plan came out late in the afternoon, but the reversal didn't really come until his speech. And do you know why that is, Dale?
Because it was in the market, and also because I think the market's concerned that if there is an impeachment trial, like I said yesterday, it could get in the way of legislation.
I don't know if it's really so much that.
Okay,
I'll
so
tell you
what?
when
What?
the market really turned.
So okay, I'm ready. What's the answer? I flunked my pop quiz.
Is when, because it was in the market, and you're right about that. Like we all knew. I mean, we knew. Even they were reporting, like Reuters was reporting, oh, it's going to be 1.9 trillion. And so we knew what the package was. We all went in eyes wide open to his speech, saying, all right, well, here's the package. Market's not really moving. We saw a little late in the day, a little bit of sell-off, but probably more profit taken than anything. But it was when he explicitly basically said that we're going to have to pay for this.
Oh,
like the stimulus doesn't come for free. And that's when the market goes, oh crap, we are going to have to pay for this. This means higher taxes. There's no doubt that higher taxes are coming. So whether the market really latches onto that or not is going to be interesting over the course of the next, couple weeks. And I think when you're seeing these currencies like the Aussie, or you're seeing the Kiwi, as you pointed out, the head and shoulder pattern is still intact, or the S&P starting to probe some pretty key support. Some of these breaks would be, it's going to be a pretty bearish breakdown if we start to if it starts to pick up some steam. And all week long we've been looking at the same spot, 37.67 on S&Ps, and you're looking at the Kiwi at sitting at the head and shoulder pattern, at 71.50, the neckline. Aussie, big trend line here. There's a lot of really key levels that are coming into play, and if they break, we could see some and I'm just talking about the euro. I was just talking about some of the risk currencies. Look at the euro dollar. I mean, how many people have been trying to buy the euro on this dip? We might find ourselves closer to 120 in the next, week or two than we thought. So anyway, that's I think that's what we have to be careful of. And
I think the market's smart enough to know that that all the stimulus was going to end up being part of the debt the taxpayers pay off. So
yeah, and I think that's the
I don't think they needed to hear Joe Biden say that we're going to have to pay for this. Do you really believe that?
I mean, do I really believe that we're going to have to pay for it?
No, that's why the market came off, is because he said that we're gonna have to pay this back. It goes on our debt.
Yeah, I mean, well, that's the thing, is when I think the market realized at that point, when he was talking about the stimulus efforts, that it is going to have to be paid back. And I forget what his exact words were, but you think about that. That's when people start, getting that wake up call that wait a second. There's
no free lunch.
There is no free lunch. And whether the market comes to that realization today, tomorrow, or in the weeks ahead, I think it's going to. And that's I think the real risk to the market. And if you think about, Dale, you've been doing this longer than myself. What'd you say?
Couple months.
Just a couple months.
Yeah.
And what I've found is, at the beginning of the year, it's usually the first, about a couple weeks after the year starts, you get everybody making their plans, and all the institutions are trying to figure out where they're going to want to buy or sell whatever they're trading. And usually after the first 2 weeks, we start to figure out a direction here for the next couple of months, for the first quarter. And this could be a big turning point in the market as we talk about inauguration. Stimulus is we're getting stimulus now. The market's going to start focusing on COVID and the vaccines. We already know that we got vaccines coming. How is our quest towards herd immunity gonna pan out? And then the market's going to start looking ahead of all this, and so I think we need to be really careful with risk up here, especially with the S&P at what I think is pretty key resistance. So anyway, I'm going to go ahead and start getting down some of these key levels for the bias chart. So let's talk about that now. 37.67, that's the S&P. That's going to be pretty key now. 37.67. You guys know that is the level. Yesterday we wrote down 38.40. The problem is we were looking for maybe a push up into resistance here. Problem is we're making lower highs now. So it's not bearish. It's just, that's a subtle shift in change that we're seeing. So 38 right now, 38.30 is going to be key. We're bullish for now, but we break below this support, we're going to have to flip us to range. Okay. Let's go with the euro. The euro, obviously 121.10. I'm going to write that down, but I'm also going to write down. Now we had supported the 78% retracement, and we were talking about 121.25, I think, yesterday. Let me double check that. So we projected that we were going lower, which, I mean, I guess I'm going to do the exact same thing today. Let's look for, this support to be tested if we can break yesterday's lows. Well, I'll just put in 121.10. And then below that, 120.60. And resistance now, as long as we are below 121.75, you got to be real careful. Oh, shoot. You got to be real careful with being on the long side right now. It's not bearish, but I think you just have to be careful. So the cable, once again, another failure at 137. Now, I just want to say that I think that the cable is still holding up very well, despite it coming off these highs. I go back to the weekly and monthly trends, and I go, okay, well, we're above this, descending wedge breakout point. Keeps me bullish the cable to a certain extent. Doesn't mean I have to be buying the pound dollar every day. It just means that, I tend to have more of a bullish sterling outlook when I'm looking at different currencies. So right now we do have, double top here, possible triple top. We're probing support, the 38% retracement. I get all that. I do think we could actually pull back towards 134.50 again. But if you look at just this 4-hour chart, you can see higher. We're making higher lows and higher highs. Now, the last few highs have been consistent, so we might be building more of what I would call a bullish wedge, like this. So I think you just have to be respectful of the fact that the pound is still, even though it may pull back right now, it's still in a bullish breakout situation. So support today, I think, comes in at like 135.50. It's a 618. So I'm going to write that down. Obviously 137 is resistance. Yesterday we probed that resistance, took stops like 10 pips above that, and then came back off again pretty quickly. But I'm just saying that I think that dips are probably going to be bought. Okay. Aussie, we got to be really careful if we break this low right here. 72.20. If we break that, we should see, I'm sorry, I said 72, 77.20. We should see 76.70 again. So 76.70, 77.20, and I'm going to put an asterisk next to that level. Resistance now, anybody who's long is going to be like, oh man, I wish I could get out if we got close to 78 cents, right? Because you see the rally yesterday, it peaked at 78 cents. And now anybody who's long is like, oh my God, if we could just get anywhere close to that, I'd be so happy getting out. I think the Aussie dollar looks very slippery here. Okay. I'm going to write down resistance as being this high. Actually, let me do something else really quick. I don't want to write down 77.50. It's too close. 77.80. Okay. Kiwi. We get below, for some reason, if we get below 71.50, we'll be near term bearish. This is critical support. You notice I have multiple asterisks there. Head and shoulder pattern still developing. Resistance 72.40. If I'm not mistaken, yesterday, oh, I think we probably wrote 72.40 yesterday as well. Yeah. Dollar Canadian. So the loonie, very strong. I want to talk about a possible double bottom here, because see, if you think about this double bottom, this is your actual neckline. It's at the 618 retracement, which now it's still the 618 retracement, because if you take that high from over here and you just go to, oops. Oh, no, I'm sorry. Here we go. I grabbed the wrong thing. Okay. So if you grab that high to this low and then over here to this low, it's still the 618 retracement. So that means that is extremely, I might as well just take it over here. That is extremely important resistance. 128.30 roughly. Okay. Very important resistance. I think that it's kind of like the Aussie. I think anybody who's short the dollar Canadian, who got short right into that support, is going, oh my God, I can't believe I'm short this thing right now. You know, so you got to think, put yourself in their shoes. Where do they want out? They're probably thinking, oh man, if we just get somewhere down here, I just want to get out of this thing, right? I just want to get out of my shorts. I'll take whatever. Just give me somewhere down here. So I think any move back down to 126.60 be very well supported. Dollar Swiss. Same as yesterday. 88.50, 89.20. That's some pretty key resistance, because if we break that, we should take off towards 89.90 or 90 cents. Okay, it's still range there too. Dollar Norwegian krona. We are getting close to breaking this channel. So resistance right now is, let's call it 8.53. And support is going to be 8.43. And the reason why there's an asterisk there, because that is the channel resistance. And I'm going to keep it in bearish right now. I mean, look, your best risk reward right now for what we've been looking at is short US dollar Norwegian krona right here. And I'm not in that camp. Like, that's not a trade that I want to do right now, but this is the channel. So, I mean, you sell it here and you put your stops right above the highs. I think the dollar's at risk of actually rallying. So that's why I don't want to do that trade, but that actually is the best risk reward trade right now. It's just taking a short here, and you know what your risk is. You get stopped out, you get stopped out. Let me go over just the last couple. Dollar yen. Again, this is one of those that I'm just very happy not to be trading right now. 104.40, 103.50, same as yesterday. Dollar index still constructive, because we're above this downtrend line. So, and you can see this is actually probably look at it something like that, but resistance now 90.70, support 89.90. Dollar Mexican peso. This is still the Wyckoff pattern. It's still in development. So And we tried to probe below 1970 yesterday, and above 1990 should squeeze. So okay, and last but not least, gold. Steve, Stelios, you guys here?
Nope.
No, mate.
Okay, good. I was thinking maybe we should tell our listeners what we have in store for the face webinar moving forward. What do you guys think? Should we talk about it now or should we wait?
Yeah, absolutely.
You want to talk about it now? Okay. I'll talk about it here in just 1 minute. I actually want to talk about a few things. I got an email yesterday. That's why I want to discuss this. Support is, again, 1860, 1820 is going to be support here. Okay. Same as yesterday. So we here at Forex Analytics, I got this email yesterday, and this email is from a gentleman.
Blake, can you show the bias chart 1 second, please, so I can take a shot of it?
Nope. Nope.
'Cause
You're not
you're
even
really
here.
quick.
You said you're not even here.
You were really quick, man.
Okay, there you go.
Okay, 1 second. I got it. Thank you.
Okay. So I got this email yesterday about this trader in London, and he's really excited about joining the Forex Analytics family, and he's like, I can't wait to be mentored by you. And I'm like, whoa. I don't coach necessarily, I'm not a coach per se, but I'm in the chat rooms all day long. Here's our chat rooms here, and you can just look at the green. Look at all the green comments, and those are going to be Amanda, Stelios, myself, Paul Franco. And so you can see all the chatting that we do, throughout the day, in the morning, and all day long. And, you can, ask me questions there. And that's really where I'm at. And that's where not just myself, but the rest of the community is. We have a great community of traders with Forex Analytics, and you guys are on Jumbotron, by the way. And, I wanted to express, like, I can't guarantee like anybody's going to be successful. We just can't do that. I mean, but I can guarantee you this: having company, like-minded people, when you're venturing to do something, is a great thing to have. Having support of a community will only help increase your knowledge all the way around. I can't, there's an old saying, what is it, Dale? You would know this. You can lead a horse.
Well, I know all the old sayings. Yeah.
Yeah, you do know all.
Lead a horse to water.
Yeah.
Can't force him to drink.
No, you can't. And I mean, I could literally say, I could come out every day and say, buy the euro, then sell the euro, and sell it here, buy it here. And somebody's going to screw it up because they don't, they're going to do whatever they want to do. So I can't control you at all, nor can anybody else. But what we can do is we can offer you support and, help you work through your issues and hopefully speed up your process and hopefully becoming a successful trader in the years ahead. And that's what Forex Analytics is about. Okay. But one of the other things that I wanted to make sure that we did, and we had some, we have retail sales coming out. I'm sorry. Hold on 1 second, guys. I'll put you right here. Okay. We got retail sales. Let's go grab our, data flash. You guys were supposed to tell me that we had this going on, and I could have.
I have one job, but I was just listening to what you were saying.
Oh, got it. Here's the euro. Just we'll keep an eye on the euro since we're so close to support here. And how much time do we got? Oh, it should be here. There we go. Retail sales are weaker than expected. Producer prices a little weaker than expected. All right. Well, that didn't move the needle at all. Okay. So
It's bullish.
What's that?
It's bullish. Everything is bullish. If it was good,
It's always bullish. Everything.
if it was good, it would show that the economy is recovering, so it's bullish. If it's bad, it will show that the economy needs more stimulus, so it's bullish.
At least you know how to make the narrative now. It took you this long, Steve, this long. So I'm gonna say this about Forex Analytics. Our community is very important to us. It's the most important thing. Here's our Forex Analytics chat, as you guys know. Okay. And it's extremely valuable to us. And in our quest to make sure that our Forex Analytics community gets the most value out of what we do, what we are going to do starting February 1st or the first week of February, I think it's February 4th. Or is it 3rd or 4th? Hold on, I'll tell you. It'll be the Monday. So no, it's the 1st. I'm sorry, February 1st. So what we're going to do to starting February 1st is your face webinar is going to start here as it normally does. But it's only going to be an hour versus an hour and a half right now. Because what's going to happen is I'll come on with Steve and Stelios and, Grega and Andre and, Paul Franco or whoever else.
Obviously,
I'm sorry.
Dale.
What?
Obviously, Dale as well.
Oh, it's okay.
Dale's always going to be here. I'm just talking about
Well, I don't know.
It'll be us first talking about our ideas in the market, and then Dale's going to be here, obviously to provide analysis, but also, Dale's the best at asking questions that people are waiting for or trying to answer them, ask themselves. And then Dale's going to have his interview after that of all the guests that he brings on. And then after that, the face webinar will be over. And then immediately following, we'll have a Forex Analytics only for our subscribers, the bias chart, because we go through the bias chart every day, and it's something that I do every day. And then I'll be there specifically to answer questions from our community, because every day what happens is we get so many questions and so many comments that I can't address them all. And my goal, or my personally, I want to make sure that I address those people that support our community first and foremost. So I want to make sure that I give them the appropriate time to answer questions that they have. So that's what we'll be doing after the 1st of February. I appreciate each and every one of you. That's why we do the face webinar. We keep it free, and we want to make sure we provide good ideas every day. I want to try to get on here to give you some actionable ideas, because I've always got something that I'm like, man, this is what I'm really looking at today, and I want to continue to provide that for you guys. And so do the rest of the team. But also, I want to be able to do the bias chart, not rushed. I want to be able to do it thoroughly and be able to answer questions along the way on why I'm looking at this particular area. You notice we do the bias chart, I run out of time. I mean, I'm just throwing up numbers, and I'm looking at charts. And I go, yeah, okay, well, we got the support here, 2120, then we got resistance, 2220, and then we write it down, and then we just move along. It's like, I want to make sure that everybody in our community really understands why I'm getting these numbers and how important they are. So anyway, for those of you that continue to support Forex Analytics, thank you very much. For you guys that listen in to the face webinar, we'll still be here, and we'll still be here daily, and we'll still be here daily providing you some good ideas. I just want to, make sure that the Forex Analytics community is getting the utmost attention that they deserve. So with that being said, if you want to learn how to be part of the community, go to the Forex Analytics sponsored. Pepperstone Securities is our sponsor. Open an account there. You can get Forex Analytics free for a period of time. Also, the best pricing that we have right now for the year is our sales on. So, all right. Steve, Stelios, you guys, and Dale, do you guys have anything that you want to add to that?
Yeah. First of all, people can get the whole thing with the extra 2 client webinars, even if they just are Forex Analytics Lite subscribers, which only costs $19 per month. So, in essence, you want to get the whole thing and the extra webinars. It's really not something expensive. So I just wanted to, clarify
Yeah, that's
that.
a great point. I didn't mention that yet. Yes, you can be a light member at $19 a month and still, you can listen into all the webinars. And that's to include the daily roundup too, because the daily roundup, which is 4 hours from now, I really kind of hone in on what I'm looking at going into Asia. You know what I mean? And what I'm gonna be looking at for the remainder of the day. So
Plus, of course, they get a lot of the rest of the services besides the webinars.
Yes, yeah, that's true. I mean, I know we were just talking about webinars today, but they get the app, and you get all the alerts, and having the alerts pushed to your mobile device when you're away from the computer is huge. So
And listen, guys and girls, believe it or not, Forex Analytics has cost like a lot of money. We've been ongoing in developing and adding value to what we do literally on a monthly basis. And in essence, we almost do it for free, having to do with, us, the founders of Forex Analytics. So, by supporting us, you're mostly supporting, because like 95% of what we get, we reinvest in adding value to what we do.
yeah,
And that's true.
It really is just to continue to push out new features. And you guys don't know what we're doing behind the scenes, but our development costs every month.
Speaking, Blake, of new features, it's also like a good segue for me to mention that today we had like a last going over the implementation and all the processes for the live squawk. So at some point next week, we're going to be releasing that to our subscribers. It's another example of adding value. You will be able to get live squawk feed.
The audio feed.
Audio feed, yes, the audio feed, because you anyhow have the headline feed. You will be able to have the actual live squawk audio feed at a discount than you can get it if you just separately go to live squawk and get it. And
so let me give you an example of what that means to you guys.
And it's a business. Sorry, Blake, give me one second, and you can say. And just to give you an example, and as always, I'm being very straightforward and honest. We're getting that. It costs $60 per month for somebody to get the live squawk fed. We're getting it at a $10 discount, and we're passing that discount 100% to you, 100%. So you can get it through Forex Analytics for $50, and we're getting $0 out of it. And I'm not exaggerating.
No, that's exactly right. So instead of going to live squawk, if you're a Forex Analytics subscriber, you're going to get a $10 a month discount. That's the price that we pay. And we paid for the development costs that
exactly to implement
working on for the last several months. So we don't make any money, but we developed it, and that is now a benefit to you. So think about what we do, guys. And that's, you guys are going to have, you could go to live squawk if you want. You're just going to pay a little bit more than when you're with us. So, yeah.
Of course, it's an optional service. If they want to get it, all of our clients will be able to trial it for 10 days, completely free of charge. And if they like it and they want to continue with it, they'll just have to pay extra for it. But as I said, it's still going to be a discounted price to what they get if they go directly to live squawk.
Yep. So it's just a pass-through cost from them to you to us. No. From that, I don't know, however that works. Anyway, guys, I'm gonna say, Rick made some nice comments. He said, I've been a paying subscriber since about 2003-ish with Blake's previous venture and now Forex Analytics. The tuition has been well worth it. Learning the technicals, etc., by hearing why folks do things and behind the scenes is priceless. Very much would say anyone not a member, well worth your time and money. And thanks, Rick. That's Rick R in the chat room. For those of you guys that know Rick in the chat room, he's I literally met him in person in Dallas in like 2009, maybe, and times before that too. That was probably, well, no, 2013, maybe. It was probably the last time we saw each other. Anyway, Rick's a great guy. He's been around for a long time, and thank you, Rick, for the kind words. I'm going to leave you guys because I know you guys have other things to talk about to get them prepared for today. But guys, I'd like to see you be part of the Forex Analytics community. Steve, Stelios, and Coach, have a wonderful Friday.
Thank you.
Thank you, mate. You do.
Thank you. So, TGIF, everybody. I hope it's been a good week for everybody. It's been quite choppy, and again today it's chopping around, and you know, nothing. Actually, although silver is going down now, but still, you know, nothing major happening today. I think there's a couple of things to mention. First, Jerome Powell spoke yesterday, and he said a few things, but the main one, and the one that the markets kind of listened to straight away and reacted to, was when he talked about tapering asset purchases, and he said something along the lines of, you know, this is not the time to do it, or we're a long way from doing it. So that kind of
100 years or
took
something
out of the, you know, yeah, exactly. So, you know, anyone who thought remotely that tapering could start within the next year, or I don't know when, that went out the window. And the immediate reaction obviously was for stocks to go higher, because, you know, we talked about it before, how things react. And
although I really wonder if there was I really wonder if there was anybody, after all the rhetoric we've heard, that actually believed there is even a remote chance, you know, that there is going to be
for any of the major central banks.
Yeah,
the ECB is a million miles away, the Fed as well. I don't think there, but bottom line is equities liked it initially, and it's actually quite sad to see stock indices rising, not because the economic situation is getting better, but because a country is going to be trashing their currency. You know, so that's quite sad, but it is what it is. So Jerome Powell spoke yesterday. That was the main item to note. And the Fed, well and truly, still dovish, and I don't see how that's going to change in the near future. I mean, it's you know, given that the economy needs stimulus to the tune of, you know, 2 trillion now and maybe 2 trillion later, and checks are going to people's accounts. And, you know, I was speaking with an American friend of mine yesterday, and I was saying, hey, you know, you got another check coming, great. And he goes, you know what? Me personally, in this person, he has a good job, you know, he's absolutely fine. So he goes, you know, a lot of people spend their checks, say, buying iPhones, or, you know, putting it on their Robinhood account and trading. But there's the vast majority, the money's going to basically fill the gap and keep yourself and the family going for a little longer. So it's not, I don't think we're going to see inflation because of these this helicopter money, basically, at least not yet. Because the way things are going, when the way businesses are closing and unemployment's gone so high.
I will have to disagree with that, Stelio, and I'll tell you
so?
the basic economic premise and why I disagree with that. Making money by working is a compensation for, let's think about it as a pot of goods. So people working, they contribute in that pot of goods, and then they get money back with which they can buy stuff from the same pot, not the stuff they created, whatever they need, right? Now, one way or the other, when you actually give people money to buy stuff from a pot that at the same time they didn't help expand by creating more products or services, of course, that by default is inflationary.
Yes, but that means, you know, you have to compare what they were making before and what they're getting paid now. You know, if you're making, you know, 2, 3,
yes,
4,
but what
5,
they were making before, they were making to add to the pot.
I know, to add something. Yes, but
yes,
you have to look at what the use of these funds are for. You know, if you don't have any funds coming in and you need money for food, you know, you're going to buy the basics, and I don't think that's inflationary.
It is less inflationary. We can agree with
It's
that. It is less
inflationary when you
inflationary.
start. Yeah, when you start buying things you don't actually need to survive, then everything you do, I think, becomes more inflationary. But anyway, it's a long discussion.
As you very well said yourself, there is a portion of the population that will actually get the money because more or less it's indiscriminatory. I mean,
Yes.
it tapers off. The money you get tapers off depending on your income, but it starts tapering off at an actually high income. So there is a portion of the population that's going to get that money without having actually had any
agree.
damage to their income.
I just think it's a tiny percentage. But anyway, it's a long discussion. You could be right, could be wrong. But I personally don't think these checks are going to lead to inflation, at least not yet. But anyway, the way they measure inflation as well is.
By the way, so I don't get misunderstood, Steli, because I see a comment. It says, "Steve, millions are out of job." I'm not saying that people should not be supported, especially the people that lost their jobs because of the situation and the government shutdowns. So I'm extremely sympathetic to supporting, especially businesses that had no option. I mean, they were just forced to shut down. I mean, yes, there is no question about it. So I'm not questioning, if there should be something to be done to actually help. I do think so, though, that there should have been done a much better due diligence, because especially in the first package, we saw a lot of companies, for example, that had absolutely no change in their income. They actually qualified for PPP, etc. So
yeah, I agree.
So there was
no means testing.
Yeah, there was a decent amount of moral hazard to it. People and companies could actually get access to funds that at the end of the day, people will have to pay through taxes or inflation that they shouldn't have had at all.
Yes.
Yeah, they also still, I saw something interesting. They took away the penalties from pulling out money from your retirement account. And there's been a lot of that going on. And I saw a featured piece on CNBC that 60% of that money that people are pulling out of their retirement accounts, there's some people that are, putting into the stock market, but the vast majority were using it for paying for medical bills, food, housing, and people are worried that, they're not going to replace that, and that's going to make many more people's retirement shakier because, that money most likely won't be replaced, so.
Yeah, that's a good point.
It could cause a retirement crisis, was the point.
There is already a retirement crisis.
Okay, exacerbate it.
Yes.
Something, it's like saying somebody was shot 20 times and they died. If they had been shot 18 times, they would still be dead. Unfortunately.
Or 9 times if you're 50 Cent, you make it.
Yeah.
He was shot 9 times, right?
Unfortunately, the vast majority of social security funds, do you know what is the main asset they own?
What's
bonds?
Yes, debt of the same government, meaning it's
but
in
this
essence,
isn't social security. This is their own personal.
Yeah. No, I'm not.
Yeah.
I'm talking now about the, because there are a lot of countries that have that the pension system is mostly or only public. You know what I mean?
Oh, okay.
So there is a huge problem with that. A huge problem. Projecting forward like 50 years, there is no real money to pay unfunded liabilities that have already been accrued.
I'm not going to worry about that.
Come on, you've already lived
you shouldn't either. You'll be an old crotchety old Greek.
You've already lived 100.
He's already that.
You'll have dementia, but
he's already like that.
You've already lived 130. Who tells you can't live 180?
Yeah.
Anyway. Yeah. Okay. Yes. So what else to say? Okay, we actually had another piece of news which might affect the euro. The Dutch prime minister resigned over a scandal of social. Basically, from what I read, the government the tax office went after families and asking for money back because they claimed that people were dodging taxes or they did fraud, benefit
I
fraud,
don't
something
believe
like
it.
that. But they weren't. That's the thing. The people were not. So the tax office actually falsely did that. I don't know how and why. And now they're paying back money to the people. But it's from what I read, it's destroyed quite a few families and thousands of people affected. But anyway, Dutch prime minister stepping down, and that will bring some uncertainty there. But it's Holland, it's the Netherlands, so
Yeah, I'm
they're
not
okay.
worried. Yeah, they're gonna be just fine.
And
They're
it's
gonna
not
be just-
easy to step down in wooden shoes.
That's a good one. That's a good one.
Oh my
Oh,
God.
Yes. So yeah, not much more to say really. I mean, the stimulus for the US is 1.9 trillion, as everybody now knows. Apparently, there's proposals within that package that Republicans might not agree with it, so we might have talks and talks before something is agreed. And then again, we have Trump's impeachment as well, so that might also delay
the
things.
usual hypocrisy from politicians, and that's not targeting Republicans. In this case, it does, but I mean, not specifically. That's the nature of politics. During Trump, deficits and debts exploded like never before, as of course it had happened with the previous government, which was democratic. I mean, debts and deficit had exploded in a way that hadn't happened before that. But suddenly, when the government switches, they suddenly remember, that it is important to be somewhat fiscally prudent. I mean, I hate this type of hypocrisy. I mean, is there some kind of
it's like the Fed chairman. Whenever
yeah.
they step down, then they see how things should be.
Yeah. Then they start noticing that perhaps there are some issues, some bubbles, but before that, everything is rosy, everything is perfect, everything works as intended. Yes, exactly.
Yeah. Oh well. Yeah. Let's see what happens. Okay, I don't have anything else to say, so we have 6 or
Dale,
7 minutes.
do we have no, we might have more actually. Do we have an interview today?
No.
We don't. Okay. Oh,
By
I
the
do
way,
have
I remind you, we have a
we
meeting.
have a
in
meeting
about
at the top of the
7
hour.
minutes.
Yeah, I just
So,
remembered to tell you. You're absolutely right. Okay. So anyhow, not much to say in comparison to the previous days. Somebody can say, "Oh, we had nice follow through to the downside in the S&P." I'm going to answer, really? I mean, here's the daily chart. Really? I mean, do you really see some type of a breakdown? I mean, here's the 4-hour chart. If we want to, zoom a little bit closer, really, have we really broken down? The answer is no. So nothing has really changed there. I am paying attention to the recent consolidation in gold because it looks to me, I don't know if it's a flag. I don't know if it's a triangle. Here's the alternative. There you go. But I do know that it is very likely that there is going to be more downside in the short term. I reiterate in the short term because if we go to the daily chart, I'll remind you that my view remains that even if this is a short-term consolidation, which it likely is, I mean, we've had a rather strong move lower, and the fact that we've spent the last 4 or 5 days just consolidating and not really producing some kind of a rebound doesn't really inspire confidence that the next move is going to be to the upside. But it doesn't really change at all my medium to long-term thesis. I think we're still in a larger consolidation, which is going to be resolved to the upside. So keep that in mind. Here is silver. Silver perhaps leading gold, because if we go to the silver 4-hour chart, you'll see that this was likely a textbook pennant, right? That guess what? It has broken down, right? But that also doesn't change the general bias for silver. I mean, yeah, it looks like it wants to go lower temporarily, but medium to long term, I think it's going much, much, much higher. Now, having to do with risk assets, besides the obvious fact that the stock indices have not broken down, what I was saying yesterday and the day before yesterday remains to be the case, meaning neither have commodity currencies broken. Here is the Aussie. Yes, it is testing once again this channel, but it hasn't broken down. Here's the Kiwi. It's not even actually yet testing the channel. Here is the USD CAD. It's not breaking higher yet, at least. Here is the USD NOK. Same deal exactly. Hasn't broken higher yet from this channel. Here is copper, which is testing this wedge, hasn't broken down yet, right? As I've said, though, I do pay very close attention to it, okay? For reasons I've already explained multiple times. Here is crude oil still being capped by the confluence of resistances at $54. Nice risk reward ratio to be short against that, but keep in mind that the trend clearly remains higher, right? So it's more or less like a long shot bet. It just provides to you, in this case, a good risk reward. And here's natural gas that, in my opinion, probably has broken higher and is consolidating before accelerating. So this is, a brief outlook of a few things, which, as I've said, we've had some nice move at the very, very beginning of the week. Some potential reversal in the dollar to the upside and some potential reversal in risk assets to the downside. But as I said on Monday, and it has remained the case so far, it is still early on. It still hasn't manifested. We still haven't seen the technical damage needed, with the very exception of the Euro USD. Everything else is still undecided. So in my opinion, it's not yet the time to jump the gun. By the way, the cable, just mentioning it once again, the cable again stubbornly testing and failing this channel's trend line resistance as the RSI is still diverging. So as in the case with crude oil, there is absolutely no technical evidence that, we're not in the short to medium term in an uptrend. But against this nice confluence of resistances at 137.40, there is a really appealing risk reward to attempt to be short, right? I mean, you can risk very, very little, and if this works out, you can make probably like 3-4 times that easily if this proves to be, a key juncture point for the pair. Let me see if we have any more questions.
CAD yen.
CAD yen, yeah, absolutely. I did mention that 2 days ago, if I remember. And guess what? When I mentioned it 2 days ago, it was to stress out the importance of this area. You can see it here as a resistance, right? And it's still capping price action. So for me, this is a very nice buy if we do break out from 82 cents, or the opposite if we break through that ascending trend line support, but it hasn't happened yet. So we have a CAD yen which is clearly coiling, but there is no technical development to talk about yet. Okay, it is in my radar though. It is something I'm paying close attention to because I do think it can produce a nice trading opportunity. Somebody else was asking about platinum. Platinum above this bull flag, I still believe it has a lot more upside, right? I mean, clearly if gold and silver produce another leg to the downside, it's going to be somewhat affected But still, the medium to long term thesis doesn't change. I do think that platinum probably found a multi-year, who knows, perhaps even an all-time low recently when it was trading at 500 and what was it, $565. So I still think that longer term, this is a nice, very nice opportunity. Dale,
Yes.
we have to jump on a meeting
Okay.
with the CMT.
So that'll be a wrap, everyone. And
So yeah,
hope-
I don't know if you want to say anything more other than wrap it, but unfortunately I have to go. So I want to wish
Okay.
everybody a lovely weekend.
I wish everyone the same, and to you, Steve, and everyone, do your homework. Friday's a great time to subscribe and get used to being part of the community. And don't just count your pips, count your blessings. Have a great weekend. Let's hope that we have peace in the U.S. And I heard a guy say yesterday that when he looks at DC, it reminded him of the Green Zone in Iraq. The way it was cordoned off and militarized. And you guys know I've been talking about National Guard being used here in America. I hope that's the only city that becomes militarized. So really appreciate every day you have. Tell people you love that you love them. They're not mind readers. And that's the end of my homily. So have a great weekend, everyone, and we'll see you on Monday. Hope we added value to what you're trying to accomplish as a trader. And adios. Okay. Okay, Laura, Galaxy, Sensei, Brock, all you warriors, have a great weekend. See ya.